So in its simplest form, a contractor business, a tradesman business is a closed loop system, right? So essentially you start with money, right? Maybe not much money, or maybe it's borrowed money, but you start with some amount of money and you put that into your job, right? So that's your cost of goods sold, for equipment, materials, and then labor, with the hope that this half of the pie or two-thirds of the pie, whatever it ends up being for you, nets you this entire amount. So this circle represents your job, right? And so um, now you don't get to keep all of the excess, right? Because some of it goes to taxes, some of it goes to fixed overhead. But the whole goal of business, right, is to get this slice of the pie, this profit in your pocket. And so you do the job and then you invoice the client and then you wait however long you need to wait to collect the invoice. And then once you get paid, you pay back the supply house bill, you pay for the things that, you keep the lights on in your business, and then you pay the tax man, he'll get his, and then hopefully there's some left over. Maybe you put that into your next job, maybe you take a home, maybe you invest in your business. But that's the closed loop system of your business. And so if you're not making the money that you want to make out of that business, we just troubleshoot it like a closed loop system, just like you would an electrical problem or an AC problem or looking for a plumbing leak, something like that. We just look at the closed loop system, and there's really only three levers to pull to improve the profitability of your business, right? Number one is jobs, right? Either they're not being quoted profitably enough. So if your margin on your jobs is under 35%, there's a good chance that they're not being quoted profitably enough. Or you're quoting them profitably enough, but they're not going the way that you're quoting them. And so if you're not tracking the profitability after the job, you have no way of knowing that. Secondly, is not collecting the invoice fast enough. So every month that goes by that you're not collecting the invoice costs you real money. That's money that you could be using to grow your business, money that you can be using to do more jobs, or money that you could be taking home. Maybe it's costing you interest expense because you're carrying your cost of goods sold on credit cards or high interest rate debt. So every month you wait on your invoices, if you got a clog in your accounts receivable, a lot of contractors that cost $10,000, $20,000 a year. And then lastly is just your expense structure, right? So if you're doing profitable jobs, you're collecting your money on time, you're still not making the money you want to, then it's likely in the fixed expenses, maybe too many trucks, maybe too many employees, maybe your shop's too expensive, or taxes. Maybe the tax man has just got his hand out and he's taken more of your profit than he should. And so there's just three levers to look at. So your job as the technician of your business, if you're not pulling the profit you want out of your business, is just to walk through this closed loop system, check those three spots, and see where the leaks are.